Today I'm going to show my stash retirement portfolio. It's one of my only accounts that's even on the verge of being negative. Last week it was teetering between being down $20 and up about $20 to $50. So right now it's kind of in the middle. It tends to move up and down, but it's just been a volatile market. So what's good about Stash Retire is it's only a $2 monthly fee, and you can invest as little as $5 at a time, which I've reviewed in another video. I'll go through my portfolio. My number one holding is Match the Market, which is an S&P 500 ETF. Most of you guys know what that is. It's the top 500 companies in America, and it's been performing very well for many years now. As you can see, it crashed in 2008, and it's gone up ever since. Then we have AT&T, a high dividend payer. I have some speculation in corporate cannabis, which is what they call MJ, the MJ stock, with all the marijuana holdings. I think this might be a good long-term play, plus it's being sold at a discount right now. Boeing, also something that I've been buying lately. Boeing's taken a huge price crash with their issues with their airplanes and the software. I've been buying it at a discount. I think it's a good company. Then we got Apple, another solid company. Altria, they make cigarettes and tobacco products, and I believe they are getting into the marijuana industry as well. Another high dividend payer. 3M, which is a good stock. They took a pretty big dip on their last earnings report, a huge dip actually, and I've been, buying the dip on them. It's a good company for the long term. Real estate Tycoon, which is an ETF of just real estate people. You got the Public Storage, Simon Property Group, you got the Vanguard Real Estate Index, just a bunch of real estate. It's a 4% yield, pretty good, very low expense ratio, and it's a good performer. Then we got Duke Energy, just a really solid energy stock, high dividend yield. Another, good performer. This is a retirement account. It is a lot of safety stocks, a lot of, energy, high dividend yields, good stocks. I'm pretty confident in every stock that I've got in this portfolio. This one has a yield of over 4%, 4.25%. Then we got Ford, which is something I like. It's actually performing pretty well for me. It does have a very nice yield of nearly 6%. Performance over the last 15 years hasn't been too well, to be honest, but they say the auto market's cyclical. Also with that dividend, it's just worth it for the dividend, even if it doesn't perform all too well. And especially I got it at a pretty good price. I believe my average price is it's $9.11, which is a really good price, I'd say. Then we got Johnson & Johnson, another, really good company. It's my number one holding in my M1 finance portfolio. Microsoft, another really good company. I definitely would like some more Microsoft. It's just near all-time highs, and I hate to buy stocks that, I don't think that I'm getting a good value on. And right now I just don't think it's a good value, although it's a great stock. Caterpillar, another great stock. The Chinese tariffs have really taken a hit on Caterpillar. It's down, quite a bit, and I'm taking advantage of the dip that it's making. It's down 20% in the last 12 months. It's a huge dip for a company like that, and I will be buying it more. As you see, I have an order pending to buy on Monday. We got McDonald's, another good company. They have a good business, and they also, have a ton of real estate as well. So, McDonald's, just look at their growth since 2004, just straight up. McDonald's, just a great company. Also tied with Johnson & Johnson as my top holding on M1 Finance. Then we got PepsiCo. Walt Disney, that's something I'd like to buy more of. I think Walt Disney might be one of the better performing stocks over the next 10 years or so. Bank of America, Starbucks, also one that I would like to build up more. If you look, Starbucks lately has just been on a run. Just look at it. It's just not at a price that I would like to be buying at right now, because as you can see, it is pretty much at the top. Royal Dutch Shell, I've talked about it before. They have a really nice dividend yield. Oil company. Kraft Heinz, another company I've been buying the dip on. As you can see, they've had a pretty rough last couple years. They've been having less earnings. The dividend, I believe, got cut, but I think it still is a good company for the long haul. And at this valuation, I think it's a good buy. We got the Walgreens Boot Alliance, which is Walgreens and their pharmacies. They have a pretty nice dividend yield of 3.5%, and it has been performing pretty well as of the last year or so. AbbVie, another company that I've been buying the dip on. They are a dividend aristocrat and have taken a pretty big dip in 2019. I think it's a good buy at this valuation. We got Coca-Cola. It's just a small, anchor to my portfolio, a really stable company. Pfizer is something that I've just been buying more of. I'm actually going to put an order in for Monday there quick. Yeah, I think Pfizer's at a good valuation. As you can see, I'm averaging in, just a little bit here and there. Pfizer has performed, I don't think this chart's accurate actually, because I know they've taken a dip pretty late as of lately, but something I'm still putting money into. Then we have IBM. These are less than 1% of my portfolio. IBM's a good company. Essential Europe, which is pretty much the S&P 500 for Europe. It has a lot of their biggest companies, Royal Dutch Shell, Nestle, BP, a lot of good companies. And we got Tesla. Tesla is something that I'm just starting to buy. I think at this price of low 200s, it's a good buy. It's speculative, but it's something that I don't want to miss out on if it does end up going pretty high, which it definitely could. General Electric, something that I just picked up. It dipped pretty low. I bought it at 946, and just it was at a good valuation. Something that I just couldn't pass up buying. Then we got Sunoco, which is just a really high dividend company. They haven't been performing very well. It does have almost 11% yield, but their performance has been pretty poor over the last 5 years. Assuming it stays where it's at and doesn't dip any further, the 10% or almost 11% yield is pretty attractive though. Then we have Verizon, Colossal China, which, as you know, with the trade wars in China, the tariffs, China's taken a pretty big hit in their market lately, so I've just been picking up small pieces here and there with the dips they've been making. Then we have Alphabet, which is Google, GM, which is General Motors, Walmart. We have Slow and Steady, which is a monthly dividend ETF. It pays about 2%, and it has holdings of tons of companies. You can see Coca-Cola, Air Products and Chemicals, American Electric Power, just a ton of companies. And just as the title says, it's a slow and steady. It's just, slow and steady ETF to have. Then we have Procter & Gamble, Amazon, which is something I would like to have more, but it doesn't really fit with my dividend growth strategy. Then we have the long-term mix, BP, and General Dynamics. BP is a good one. It has a pretty high yield. I believe it's nearly 6%. Good company. It hasn't been performing too well, but it does have room to go up. And the dividend yield is very attractive. So this is my retirement portfolio. The nice thing about Stash is they do offer a DRIP plan, which is a dividend reinvestment plan. And what that does is, as you can see, my activity tab where I get all my dividends, and it shows my purchases. This is everything that I've been purchasing, my subscription payments, and also my dividends. So once we get to a dividend, you see Apple here. I got a 37-cent dividend from Apple, and it automatically reinvests it right back into Apple the same day, which is crucial to dividend investing, is reinvesting your dividends so that they can get to work for you and you receive higher dividends. I'd recommend checking out DRIP plans to anybody interested in dividend investing, as it is pretty important to be reinvesting dividends, and a DRIP plan makes it a lot more convenient. I hope this video was good for you guys. Showed my portfolio. I will be updating it monthly as to what I'm buying, how it's performing. Subscribe to the channel, like the video, comment below.